Hey there, Wall Street winners. It is Sunday, March the 9th, and as we head in to the week, I don't believe this is the time to be buying the dip. I don't think this is the end of the dip. I think it's the start of the dip. The NASDAQ has only just entered correction territory. It's likely to fall even further. We've got a lot of economic data to look at this week. So if we look at what to watch from the Bloomberg app here, we've got the New York Fed one-year inflation expectations tomorrow. On the 11th, we've got small business optimism in the US, as well as the JOLTS job openings for January. On the 12th, we've got mortgage applications, the consumer price index, which is CPI data, which is a data point used by the Fed in making decisions around interest rates. We've got the real average hourly and weekly earnings. We've got a federal budget rebalance. March 13th, we have PPI, the producer price index, another key data point for the Fed in making decisions around US interest rates. We have initial and continuing jobless claims. The household change in net worth is going to be an important one to watch. That will have dropped significantly based on the market turbulence over the last couple weeks. March 14th, we've got the University of Michigan's consumer sentiment and inflation expectations. And then we've got a ton of other things going on. We've got data points coming out from a number of different providers and government sources, university sources. We have a lot of treasury sales on the go this week, and that's not something that I typically focus on this channel. So be careful, be risk averse, keep a high amount of cash on the sidelines, put it into a money market fund or something where you can earn an interest rate on that cash sitting there. Because at some point, we're going to find a bottom and we're going to have more consistency in the marketplace, but that's probably a couple months, if not more, out. So this is going to be an extremely turbulent year with everything we've seen just in the last couple of weeks. And until we start to see a slowdown in that turbulence and an increase in consumer confidence, because consumer confidence and consumer spending drives the US economy. And as soon as the consumer is fearful of their job and begins to hold back on some of their discretionary spending, or can't have or doesn't have the ability to spend discretionary funds because those funds have been allocated to food and essential items that have gone up so much in price, energy prices or costs that have gone up so much that they no longer have those discretionary funds to spend on items. Until we start to see a change in that, we're not going to see growth in the economy. And without that growth, we're going to see a slowdown in earnings so that as we come into Q2, consumer goods manufacturers, car manufacturers, anyone that's selling goods is going to see reduced revenue, potentially higher earnings. They could do buybacks and they could have layoffs, which can potentially lower costs and boost earnings. But revenues will decline. I think we'll see earnings decline as well, and future forecasts will be weak. And we've seen the outcome of that recently. Unless you have growth in earnings, growth in revenue, and a positive future forecast, and even then, you don't always see the stock go up, but the stock won't go up without all those three right now. So we are lacking consumer confidence in the US due to uncertainty. Now is a good time to get out of the market and go to a cash position so that you don't lose your capital on the way down in the market and you have the ability to buy in when we do start to see things turn around. I'm confident the US will come out on top. They always seem to do that. They're a super strong nation, and although we're going through a bit of a hiccup and some turbulence right now, there are a lot of smart people in the US, and the US consumer is extremely resilient. We just need to see some improved confidence. That's where we are on Sunday, March the 9th. Good luck in your trades. And if you're liking these videos, please hit the like and subscribe button.